The United States has followed allies in imposing tough economic sanctions against Russia. Let's get some business on this now. We're joined by reporter Edward Boyd. Ed, what kind of impact will these sanctions have on international financial markets?
Well, they're going to have a pretty big impact, Pete, particularly on banks in Europe and Russia. So putting these sanctions on these Russian banks, preventing them from getting finance from Western banks, is going to be bad for those Russian banks, but also it's going to hurt the Western banks that want to lend banks in Russia money. So it's going to be bad for the banking system in Europe as a whole. Also, the German Chancellor has announced that he's not going to turn on the new gas pipeline that's worth about 14 billion Australian dollars that links Russia with Germany. So that's going to have implications for global gas prices. Gas prices are certainly going to start going up. The other thing we've seen is Russia is one of the biggest producers of oil in the world. And the oil price has been rising as well on the idea that Russia's not going to be producing as much oil. So the oil price is closing in on $100 a barrel. That's going to have implications all over the world. The other thing as well is these sanctions are quite going to have they're just going to have a really strong impact. Sorry, Pete. So it's going to be interesting to see how it plays out. Overnight, the US markets haven't closed yet. Dow Jones was down 2% at one point before President Biden introduced the sanctions and said he's hopeful there's more diplomacy can be reached. So those remarks around diplomacy actually pushed the US market up from being down 2% to down about 1% at the moment. And the markets in Europe overnight are actually in positive territory. So they're up very slightly, including Russia's stock market, which plunged about 17% yesterday.
Yeah.
It's now in positive territory this morning. So we'll have to see how it all plays out.
What's going to happen here today?
Well, the local market's meant to fall by 0.3%, so not a huge fall for Aussie stocks. It's been falling all week, about 1% a day this week, and at the moment the expectation is for down 0.3%, so not a terrible fall for Australia. But the thing to watch here in Australia is the oil price. That's going to have impacts here on petrol. The other thing as well is gold prices are getting higher and higher, Pete. People are starting to buy more gold in times of crisis. So gold is approaching $1,900 an ounce. But I just had a look on the DFAT's website, and Russia is Australia's 46th largest trading partner. We export about $700 million of goods to Russia each year. A lot of that is aluminium, along with live exports of cattle. And then from Russia, we buy about $250 million worth of goods, and a lot of that's crude oil. So the total value of trade between Australia and Russia is worth about $1 billion. So it's not massive, but it's still going to have an impact.
Minimal effect, yeah. I mean, Russia does export a fair bit of wheat too, but yeah, I mean, the biggest pain, I suppose, like you said there, oil pain at the bowser, that's going to continue for a while. Someone was saying the other day, actually, that we're actually more of a chance to get to $200 a barrel of oil than we are $50 a US barrel of oil. So, I mean, that gives you an idea of how some people are thinking at the moment. Pretty drastic, I know. Anyway, Ed, final one here today. The wage price index for the December quarter will be released. Economists predict wages to have jumped 2.4% last year.
2.4% in 2021. It sounds great, but inflation in 2021 jumped by 3.5%, or the trimmed mean, which is the one the Reserve Bank looks at, was 2.6% for inflation. So inflation is beating wage growth. So it's basically eating into your wages. So you're not actually getting wage growth in 2021, which is a problem for the economy. It's a problem for the Reserve Bank. So we'll get the figures from the Bureau of Statistics later today, but they're expecting 0.7% wage growth in the December quarter, 2.4% for the year, which is above what the RBA was already thinking for wages. They were expecting it to be even lower than 2.4%, but it's still not high enough, Pete. That's the critical thing. People aren't actually getting real wage growth. Wages are still going backwards in the country.
Yeah. Okay. Ed Boyd, across the numbers as always. Thank you, Ed. We'll talk to you soon.